Come on guys, let's now solve question number 2 from our January 2025 examination question paper. This question is from the topic of internal reconstruction. One of the very lengthy questions in this question paper. The question all by itself will go for 4 pages. First page they have given balance sheet. Second page notes to accounts. In the second page they start with adjustments. They have given adjustments throughout in the third page, and in the fourth page is where it ends. Let's see at the end of the fourth page what have they asked us to do. They've asked us to pass journal entries necessary to record the above transactions, what is discussed, and they also want us to prepare notes to show the revised share capital structure of the company after completion of the scheme. They could have asked complete balance sheet with notes to accounts, but they have not asked. The class when we did the questions, we did complete balance sheet with notes to accounts and disclosures. Here they've asked only one, share capital of the company after the internal reconstruction. Basically 12 adjustments are there. For all the 12 adjustments, we would have to write the journal entry. You can assume that 1 mark for each of it, 2 marks for writing the share capital notes to accounts. Let's start from the beginning. Uncalled capital. I will not waste time reading the balance sheet and notes to accounts. I'll straight away start with journal entries, adjustments. Uncalled capital is to be called up in full, and such shares and other fully paid up equity shares are to be reduced to shares of rupees 5 per share. See the notes to accounts. Is there partly called up shares? Yeah. 8% preferential, sorry, 25,000 equity shares of rupees 10 each are called up only to the extent of rupees 8. 2 rupees uncalled will be called now. So to the extent of 2 for 25,000 shares, first make the call. When you make the call, the journal entry is share call account debit to share capital account. Let me write it like this. Equity share call account debit to equity share capital account being share call made. This is for 25,000 shares, and for each share rupees 2 is called. 25,000 into 2, 50. Share call made. Money is rightly received. And the money is received entry will be bank account debit for money received, and share call what is debited here will be credited 50,000. Share call done. These are shares of rupees 10. The question says we should reduce these shares to shares of rupees 5. So 10 rupee share will be reduced to 5. That 5 reduction will go to capital reduction account. I will take their shares of rupees 10, transfer 5 to capital reduction, give them shares of rupees 5. Number of shares issued will be same. How many shares are we going to take? Not just 25,000, but it is 25 plus 50, 75,000. Now 75,000 shares of rupees 10 will be taken. I'll debit equity share capital account shares of 10. 75,000 shares into 10, 7,50,000. Give them shares of rupees 5. I'll write 75,000 shares into 5. That is 3,75,000. And difference of rupees 5 per share will be transferred to capital reduction account. I will credit capital reduction account to the extent of 3,70,000. This is adjustment number 1. 3 entries done. Next, let's go to adjustment number 2. Adjustment number 2 says that preference shareholders will accept a reduction of rupees 2.5 per share. Their shares are of rupees 100 or 10. Let's see. It will be reduced by 2.5. That 2.5 what is reduced will go to capital reduction. In exchange the rate of dividend is to be increased to 9. Oh, we are basically snatching away their old shares, giving them new shares. They have 8% shares of rupees 10 each. We will take those shares from them. We will give them 9% shares, but they will not be 10. It will be 7.5. 2.5 what they will give up will go to our capital reduction. The journal entry will be, you will debit 8% preference share capital account debit shares of 10, which is 30,000 into 10. This will be 3 lakh. 30,000 into 10, 3 lakh. Credit will be 9% preference shares of 7.5. Number of shares is same, 30,000 into 7.5, which comes to 2,25,000. Balance 75,000. That is 30,000 shares into 2.5 per share. What is reduction? Will be transferred to capital reduction account. This is adjustment number 2. And we have successfully completed this adjustment number. Can we go to the third one? Let's see the third adjustment. See, first page is useless for us. We never went there. Second page, notes to accounts, we're reading only when we need. So we're actually starting, we're already in third page now. Question runs to 4 pages, 3.5. We're in third page. So don't freak out when you see a lengthy question. Two reasons: the paper size is slightly smaller, font size is slightly bigger, gap between two lines is also more. This question, if we put it in our material, we'll put this complete question in less than a page, 3/4 of a page max. Why? We save paper. Exam, the point is not saving paper, clear understanding of the. And again, ICI, since objective is not to make you people freak out looking at the length of the question. No, that's not the case. Preference shareholders will forgo their claim of dividend for 1 year. The moment they say this, we have to firstly check whether preference dividend, what is not paid, is it liability in the balance sheet or is it a liability outside balance sheet? If it is a liability in the balance sheet and it is forgone, there will be journal entry. If it is an unrecorded liability which is forgone, there will be no journal entry. Okay, so have a look. Come back to the question to see, is there liability anywhere? Long-term borrowing? No. Any other current liability? No. So they have given here preference dividend has been in arrears for 3 years. This is not a liability in the balance sheet. If this liability is, so to say, written off, there is no journal entry. There is a liability in the balance sheet and you write off. You will write liability to capital reduction. A liability which is not there in the balance sheet should be first created as a liability, for which you will write capital reduction to liability. When you write off, liability to capital reduction, no point. Understood? But outstanding for how many years? Okay, they are settling, some adjustment is there. Remember that, how much is it? Settling for 1 year. We'll forgo 1 year's dividend, and one equity share of rupees 5 each is to be issued for the remaining arrears of dividend. 3 years, 1 year they forgo. For 2 years, amount might be more, but we're giving them equity shares of rupees 5 each. So 2 years dividend amount divided by 5. Are you getting it? Come on, let's do this computation. I'll do one proper working note. How much is the number of debentures, number of preference shares that is there? 3 lakh debentures. 3 lakh debentures. What is the, 3 lakh preference shares. 3 lakh preference. What is the dividend rate? 8%. So, 30,000 preference shares of rupees 10 each, basically 3 lakh rupees. So, you can do 30,000 into 10 into 8% or 3 lakh into 8% for 3 years. That's what is outstanding. Do 3 lakh into 8% into 3 years or 30,000 into 10 into 8% into 3 years. 72,000 is the total arrears of preference dividend. Forgone 1 year. Yeah, forgone 1 year. 1 year is how much? 3 lakh into 8% into 1 year. How much is that? 24,000 is written off. There will be no journal entry for this. Why? Unrecorded liability written off, no journal entry. For 2 years, how much will be the amount? This will be settled by issue of equity shares. 3 lakh into 8% into 2 years comes to 48,000. This is settled by issue of equity shares of rupees 5. How many equity shares to issue? Divide 48,000 by 5. 9,600 equity shares of rupees 5 is issued to settle 48,000 rupees of liability. Remember, this 48,000 liability is not a liability in balance sheet. So whatever is given, it is not given against liability. There is no liability for you to debit. You have to write capital reduction account debit to equity share capital account. Shall I write that? And shares are issued of nominal value 5. When they've asked us to prepare that notes to accounts for share capital at the end, this equity shares also should be considered. There were 75,000 shares of rupees 10 reduced to shares of 5 plus this. I would write here capital reduction account debit to equity share capital. How many? 48,000 rupees is the value. 48,000 divided by 5, if you do, you'll get how many shares? 17? 9,600 shares into rupees 5 per share. We've written in the working note. I'll write it once again just to ensure that you don't mess up and then you don't find it like where is it written. I've written it at both places. And at the end I'll share the PDF of this. Don't worry if you'd want to refer this once again. Come on, let's go to fourth one, shall we? Very good. So we will not pay any attention to balance sheet or notes to accounts. Go on reading adjustments in the order and you will be able to solve the entry. Mr. X holds 10% of debentures rupees 2,50,000. He is also a creditor for rupees 50,000. So in the internal reconstruction process, if we are settling Mr. X liability, close Mr. X completely. Meaning take his debentures, take his creditors, debit them, credit Mr. X account first, and then do settlement to Mr. X. He agreed to cancel 50% of his total debt. 50% will be transferred to capital reduction. 2,50,000 plus 50, 3 lakh. In 3 lakh, 50% transfer to capital reduction. Balance is 1,50,000. 1,50,000 transfer to capital reduction. 1,50,000 is still there. So they're telling including interest. Proportionate interest we should find. We don't know how many years interest is pending. 10% debentures is there, no. If it is 1 year, 25. If it is 2 years, 50. 3 years, 75. We don't know. I don't think they've given direct information. We have to figure that out once again. Shall we see how much of interest is outstanding? Can there be more than 1 year interest outstanding? Yeah, there can be. Observe here. They've told interest outstanding, interest outstanding, interest outstanding anywhere. Reserves and surplus, long-term borrowing. Maybe they've not given notes to accounts, but they would have given in balance sheet straight. When there is not too much detail required, certain items they'll give straight, no. See, other current liability is given straight in the balance sheet. How much? 45,000. 1 year. How do I tell? Very simple. Debentures is 4,50,000. Interest rate is 10%. 4,50,000 into 10%, 45,000. How much of this 45,000 belongs to Mr. X? 25. Why? Out of 4,50,000 worth of debentures, Mr. X sold 2,50,000 worth. 4,50,000, 2,50,000. So 45,000, 25,000. If you want to do cross multiplication to find, or 1 year is the easier computation part. Shall I write? Okay. How much money belongs to Mr. X? 2,50,000 worth of debentures, 50,000 worth of creditors, and 25,000 worth of interest. I will debit all of them by closing that liability and credit it to Mr. X. Let me write. The 10% debenture account debit 2,50,000, creditors account debit 50, and interest payable 25. Everyone understood 25? Very good. To Mr. X account to 3,25,000. And I'm going to settle Mr. X 3,25,000 now. How? 50% he gave up. I will credit 50% to capital reduction account. I would write here capital reduction 3,25,000 into 50%, 1,62,500. How am I going to settle the balance 1,62,500? Read the question. Pay 20,000 rupees to company. To company. He is giving 20,000. We are receiving it. So I will debit our bank account by 20,000. We were supposed to give him 3,25,000. Debenture, creditors, interest together. 1,62,500 he gave up. So we should pay him balance 1,62,500. In return, he gave 20,000 cash. So now we have to give him something worth 1,62,500 plus 20,000, which is 1,82,500. Understood? Read that later part. To receive new 12% debentures for the balance. Whatever is the balance here, we're going to give him 12% debentures. 1,82,500. This is adjustment number 4. Everyone got this? Easy? Let's see adjustment number 5. Remaining claim of the debenture holders. 4,50,000 worth of debentures were there. Mr. X owns 2,50,000. Gone. Remaining is 2 lakh. And including outstanding interest. Outstanding interest was 45,000. In that, what belongs to Mr. X is 25. You remove 25, remaining is 20. So 2 lakh worth of debentures, 20,000 worth of interest. Together 2,20,000. Both are liabilities in the balance sheet. We are once for all closing it completely. I would write it. It is reduced to 60%. Meaning 40% is transferred to capital reduction. Accelerate that 40% to capital reduction first. Observe, this is slightly tricky. This adjustment is tricky. The key in solving questions in internal reconstruction is catching English, which I myself also am not that great at. What I do? Very simple. Break it into smaller parts. Read little, understand. Before you forget, process and write it. Then you read the remaining part. Understood? Don't try to eat everything at once. It will become little bit difficult for your body to process. Let me write here 10% debentures, balance of 2 lakh, 450 minus 2,50,000, and I'll write interest payable 45 minus 25, 20. and amount is transferred to debenture holders. For interest also should be paid to debenture holders. And entries also, don't try to write combined journal entry. Let's wait and see for the suggested answers of the institute to come. The day I'm recording this is way ahead of the suggested answer date. Okay, so when you see the suggested answer, I doubt there will be the split entries. Lot of places there will be combined entries, one single entry. You get it? So we are not God level. We are at the we are at the what to say the devotee level. At the devotee level, break it into smaller parts. Okay. Debenture holders 2,20,000. You get it? Now, how much is to be transferred to capital reduction? It is reduced to 260. Reduced to 260 means reduced by 40. Please do 2,20,000 into 40%, or 2,20,000 minus 60%. 88,000 is transferred to capital reduction. Balance is how much? 1,32,000 we owe them here. This is where the beauty comes. Observe this. This I would need your full attention and focus. In consideration to the reduction, the debenture holders are to receive new 9% preference shares at new face value. Here there is an element of grey. Are these 9% new preference shares given for that 60% what they gave up, or is this for, is it for that 40% what they gave up, or is it for the balance 60%? It is for the balance amount is my interpretation based on the understanding of all the questions that I have done. I have one more stronger reason why this is right. Let's say for the 40% reduction only you are giving this. Then problem number 1, remaining 60% should be shown in the balance sheet. What will you show it as? Debentures or outstanding interest? How can you leave outstanding interest in your balance sheet and still do internal reconstruction? Incorrect. And would you still show them as debenture holders? Not fair. You're doing this. It's settled. One reason. Here they have not asked balance sheet. So you will not get that doubt. So you might make the wrong assumption. But I'm trying to tell you, you have to think about balance sheet also when you do internal reconstruction. Just because it's not asked in this question doesn't mean that you are careless about it. Are you getting it? Second assumption, second reason, very strong reason. This is a very valid reason. Okay. Consider this. How much is the money that is supposed to be paid? 2,20,000. In that they've given up 88,000. You agree with me? Yeah. If for that 88 you are giving, that 88,000 if you divide by this new preference shares are at 7.5. If you divide, you will get decimal number of shares. You will get fractional shares. You will get fractional shares. By 88,000 divided by 7.5, it's not divisible. Are you getting it? However, if I go with the balance amount, 220 minus 88, balance amount, I'll get whole number. So that is one strong reason why I'm assuming that it is reduced by 40, reduced to 60, and for the balance amount, we are settling it by preference shares. And after this journal entry for adjustment number 5, if in case I prepare balance sheet for this company, the balance sheet there will be no traces of debenture holders, debentures or outstanding interest. Let me, no, 9% debentures, nominal value 7.5 to determine number of shares to be issued. Let me show that to you with the help of computation here. Let's see, 2,20,000 minus 88,000. How much do we get? 1,32,000. Divide it by 7.5 per share. Shares were originally of 10. We reduce it by 2.5 to 7.5. So please do 1,32,000 by 7.5. We'll get 17,600 shares. If you do 88,000 by 7.5, you will not get. So did you understand the basis for my assumption? However, let's wait and see what is the answer that institute will give. If you do 88,000 divided by 7.5, then you would have to write that fractional amount by cash or anything again, leading to more than one assumption. You can't issue fractional shares. Shares are already shares. How can you share the share? Agala. Did you understand this? Very good. And this will also come up in our notes to accounts. They've asked notes to accounts for share capital. Fifth adjustment done. This was the most tricky adjustment in the question paper according to me. Let's see. Question number 6. Taxation liability is to be settled at 1,20,000. Come to balance sheet. How much is taxation liability? It's not there in notes to accounts. See the balance sheet only. Provision for tax is 1 lakh. 1 lakh rupees liability is now settled at 1,20,000. 1,20,000. You would have to pay 20,000 extra. That will be further going to capital reduction only. So I would write provision for tax account debit 1 lakh, but I will credit my bank account by 1,20,000. That additional 20 will be capital reduction account. Did everyone get this? Fantastic. Provision for tax account debit, capital reduction account debit to bank account. What do we have after this sixth one? Let's go to the seventh one. Market value of non-current investments is 2,50,000. Why are they telling this? Investments to be brought to their market value. We need to revalue the investments and record them at 2,50,000. Observe the investments in balance sheet. Investments in balance sheet is 2,80,000. We should record them at 2,50,000. If 2,80,000 worth of investments are to be recorded at 2,50,000, we'll reduce its value by 30. So don't write 2,80,000 anywhere. Reduce it by crediting non-trade investments by 30,000 and debiting your capital reduction account by 30. This is 2,80,000 minus 2,50,000. I hope everyone understood this. I will now proceed to adjustment number 8. Adjustment number 8. Inventory equal to rupees 1 lakh at book value will be taken over by remaining creditors in full settlement of their claim. Very useful. They've given the word remaining. If they would have not given the word remaining, lot of them would have done mistake. Why? Out of the creditors, to an extent creditors, 50,000 is Mr. X. Balance creditors only should be settled. How much is creditors in the balance sheet? Have a look. Creditors or trade payables in the balance sheet is 1,30,000. In 1,30,000, 50,000 Mr. X gone. Balance 80,000 is settled by issue of inventory costing rupees 1 lakh. 80,000 settle madake, we have given 1 lakh. 20,000 namige loss. But I have to write that. Shall I write here? I would write creditors account debit. Instead you can write trade payables debit. How much is it reducing by? 80. Remember 1,30,000 minus 50. And I am giving them my inventory worth rupees 1 lakh. Difference of 20 will be capital reduction account. Did everyone get it? Very nice. Then ninth one. Bad debts provision of 2% is to be created on trade receivables. Let's see how much is our trade receivables. On that 2% will be created not by debiting P&L, which is usually done. In this case, we'll debit. Very good. Come on here. How much is our trade receivables? Is 2,30,000. On 2,30,000, compute 2%. I will credit our trade receivables. I can actually credit provision for doubtful debts also. I will debit capital reduction. It will be 4,600. Instead of trade receivables, I can write capital reduction account debit to provision. In fact, that will be wiser. And our balance sheet, when I prepare, I will deduct that provision from my trade receivables. Provision doubtful debts account. How did I get this 4,600? It is debtors of 2,30,000 multiplied by 2%. After that, let's see 10th one. What do we have in 10th one? 10th one, plant and machinery is to be written down by 20%. Identify the value, multiplied by 20%. Come to the question. Plant and machinery 7,50,000. They have they told property, plant and equipment or plant and machinery? Only 7,50,000. If they would have told PP, they would have taken 8,50,000. Come on, let's do depreciation but not debit depreciation. Any profit or loss arising in the process of internal reconstruction will be debited to, very good, capital reduction to PP. How much is that? 7,50,000 multiplied by 20%, 1,50,000. Did everyone get this? After this 10th one, let's go to 11th one. In 11th one, what is the 11th adjustment? Company will further issue 12% debentures for such amount is sufficient to pay off bank overdraft. They have bank overdraft. You should issue certain number of debentures. How much they have not told. We should find it. And other outstanding liabilities, and to maintain cash and bank balance of 85. You have to pay two things. One, bank overdraft. Next one, other outstanding liabilities. Both should be paid and you should still have 85,000. So basically, I'll prepare one bank account. That's a simpler thing to do. I'm going to pay. So I'll write on the credit side. How much balance should be there? Balance carried on will be 85,000. That is the balance I want after paying my other current liabilities. How much is other current liabilities in the question? Let's see. Is there any other current liabilities in the question? Other current liabilities, 45,000. That adjustment we've already done journal entry. Already written in journal entry. In all the journal entries, wherever there is bank balance, I will write it, debit, credit, everything, and I should basically find it. Come on, let's start with the balance sheet number. I have a bank overdraft of 65,000. This is not a positive balance, negative balance. I would write by balance brought down 65. 65,000 is my opening balance, and I should have 85,000 closing balance after paying any other payments that I should make after considering all the receipts. Let's see how much is the shortage. Shall we? Let's start with journal entries. Identify in each journal entry, do you have bank account anywhere? I have here bank account debit 50. That means I have received 50,000. I have received 50,000 to equity share call. In my bank account, I would write to equity share call. How much? 50,000. Then I'll go back to the entries. Let's see the second again. First entry over. Here no cash. Here no cash and bank. Here no cash and bank. Here we have bank 20. We have further received how much? 20,000. This is for that issue of 12% debentures. So I'll write in bank account to 12% debentures 20,000. I would write here to 12% debentures. Mr. X gave 20,000 and he took additional debentures. That item. Then after this fourth entry, fifth entry, do you have anywhere bank? No. Sixth entry, provision for tax paid 1,20,000. In bank account, I'll write by provision for tax and by capital reduction. I can straight away write by provision for tax 1,40,000. How much did I pay? 1,40,000. Oh, sorry, 1,20,000. 1 lakh was the provision, but I paid 1,20,000. Understood? Then, is there any other payment after sixth adjustment? Seventh one, no. Eighth one, no. Ninth one, nothing. 10th one, nothing. That's it. So now understand this and identify how much is the money that I want. I had minus 65,000 in my bank. I paid 1,20,000 and I have closing balance of 85. But I've received only 70,000 rupees in any other way. 2 lakh rupees worth of 12% debentures are issued by company. They've told you should issue sufficient number of debentures so as to maintain balance of 85,000 after paying bank overdraft and other current liabilities if there is any. That is provision for tax what I paid. Can I write 2 lakh rupees? Journal entry is bank to 12% debentures. Don't stop at that ledger. You have to write journal entry. Marks are allocated for journal entry, not for ledger. Ledger is only working note. Got it? Let's see the last entry. What have they asked us to do at the end? Adjustment number 11 over 12. Amount available by scheme, basically in capital reduction, will be utilized in writing of goodwill, debit balance in P&L. This anyways we will do even if they don't tell. They've told after this if there is any excess, we'll usually transfer to capital reserve. They're telling before you transfer to capital reserve, adjust against inventory. After adjusting inventory and writing off inventory, if you still have excess, then you should transfer to capital. Did everyone get this? Come on, let me write this. To do this, I would have to identify the balance in capital reduction account. I can prepare a ledger or you can help me with the calculator. Will you help me with the calculator for me to save time? Please take your calculator, everyone. First entry, no capital reduction. Second entry, no capital reduction. Third entry, we have credit 3,75,000. Take minus 3,75,000 in your calculator. Done. And in the next entry, we have again minus 75,000. And here I have debit 48,000, meaning plus 48,000. Minus for credit, plus for debit. Whoever has not done, I'll tell once again. Start with minus 375. Again do minus 75. Now do plus 48. And now continue. This entry there is no capital reduction. Here again credit. You do minus 1,62,500. Understood? Again here nothing. Here you do again minus 88,000. And here you do plus 20,000. Then next entry plus 30,000. And debit again plus 20,000. Plus 4,600 plus 1,50,000. What do you have in your calculator? Is it minus or plus? Minus. To close it, I would have to do plus. Basically, debit it. 4,27,000. If in case you choose to prepare ledger, this is how it would look. Okay, I'll finish the entries and then come. And using this, what do? We'll first write off goodwill, then P&L debit balance, then we would have transferred to capital reserve, but they've told inventory. How much is goodwill in balance sheet? Goodwill in balance sheet is given in intangible assets. It is to the extent of 60,000. I would write here credit 60. Then I will also credit P&L account debit balance. P&L account debit balance is 2,50,000. I will write 2,50,000. 2,60,000, no, I still have balance left. I would write it to inventory. Don't write full amount to inventory. Inventory will become negative in the balance sheet, which they have not asked. But still, if you prepare, you have to always have that vision. Yeah, come on, have a look at inventory. Inventory is 1,20,000. Here, do we have more than 1,20,000? Yeah, we have more than 1,20,000. 250 plus 60 is 3,10,000. 3,10,000 minus 4. Oh, we don't have so much. Okay, then we'll write off how much? 1,79,900 is available. How much is inventory? 1,20,000. So how much will I write off? 1 lakh. But you need to remember 1 lakh worth of inventory is taken over by creditors. Only 20,000 worth of inventory is remaining. Trade payables took over inventory worth 1 lakh. So only 20,000 is remaining. Oh my God. At this step also you would have drift. So after deducting 20, whatever is left will be transferred to capital reserve. And if you prepare capital reduction account, it would look somewhat like this. I've done the same thing. You would have to do one small notes to accounts for share capital. In that you would write 75,000 equity shares of rupees 7.5 each, and then you will write that preference shares. Some preference shares of 8% are now changed to 9% at 7.5, and some preference shares are issued somewhere here. Here. So you had originally 30,000, now you have 17,600, 47,600 preference shares of rupees 7.5 each, and 75,000 equity shares of rupees 7.5 each. That calls for the end of this 14 marker.